you are, where you want to be, what are your goals, what are your objectives, and for that they get, not only a bound financial plan, but an actual plan that comes to life through the internet that updates daily and helps keep them on track.
Oh, so they can update or check on their plan through the internet?
Yeah, it's changed a lot over the years, Jeff. What used to be was they would pay us a fee for service and we'd build a plan and say, here you go, we'll check on you once a year. Now, when they build a plan with us, their data gets entered into a secure site that links to all their accounts and updates daily. So as the market changes, as certain life events change, as they're paying off mortgages, as they're getting those raises, they see those changes in real time every day on their website.
Interesting. That seems like a really good feature.
It is. It's the wave of the future, and technology is a big part of what we do, and we're always trying to embrace it.
Is it hard to keep abreast of technology? I know you're very young, but still, isn't it kind of sometimes overwhelming, all the opportunities or all the different kind of options that are out there?
Yeah, it is. I mean, you really have to make sure you're budgeting your time well, but technology has always been something of interest to me. I mean, I remember when I started at my first firm, I had to go to senior management and say, hey, there's this thing called email out there. You might want to look into it. I think it's good for our business. Now, if we look at a general day in the, the lives of the financial world, if our server's down or internet's down, it's like we're paralyzed. So.
No question about it. Talk about all the information that's out there. You have, programs or networks like CNBC and other Fox Business, among others. Do they have an influence on people's decision making or knowledge base?
They do. What we're seeing now more than ever is, information's great. We live in the information age, but it can also be a detriment as well. There's a lot of misinformation out there. Let's face it, in the news, bad news sells, and people try and profit on that. So a lot of times what we're working against is, there's a lot of financial gurus out there who like to speak. Kramer is one of them, Susie Orman's another. And, the issue with some of the Susie Ormans of the world is that they're giving blanket recommendations. So what, and in our world, we know what's good for me might not be good for you and vice versa. So we try and stay away from those. But a lot of times we have clients coming in and say, oh, I heard I should be doing this. Everybody should be doing that. And a lot of times that's not the case. A lot of times they're getting good recommendations, but everybody's unique and everybody should have unique, recommendations. As far as data gathering on the form of research, it's very good. On our website, we put out 2 reports a year. We put out our forward-looking statement, which is our annual forecast. It comes out towards the end of fourth quarter of each year, talking about our projection for the year. And then we also do a mid-year assessment. And a lot of that is taking in all that data that's now readily available to us and putting it in plain English so clients and consumers can see what's going on with the market and have some type of direction as far as where we're heading and how to prepare for that.
Brandon, the stock market for the last year has done quite well. What do you think's behind that?
Well, we came out, and again, as I mentioned, fourth quarter of 2011, and we did our analysis. And we actually, again, not to keep driving to it, but our website and our forecast on there actually talks about everything that we projected back at the end of December. And a lot of what drove that was the information that we were able to gather. And we had forecasted for this year that the S&Ps were going to do somewhere between the high to mid low digits in the form of return. And what was driving that were things like consumer data. For example, what consumer sentiment, when we went out at the end of the fourth quarter and said, how do you guys feel? Everyone's like, oh, it's tough. We can't even go out for dinners and, I got to buy groceries and things of that nature. And that's what they were saying. But what they were doing was the complete opposite. Retail sales were up. Unemployment was improving. Consumer stores like Tiffany's, for example, had one of its best quarters in the history of the company. That doesn't happen if people aren't spending their money. Nobody needs to go get a new pair of earrings. So a lot of that data with consumer sentiment, oil prices, the Fed coming out and saying that they see interest rates staying where they are till 2013. Collectively, we take that data and we put it into an overall report that really helps us get an assessment as far as where we think things are going. Year to date, as you can see, the S&P as of yesterday's close was up over 13%. So we're already, where we thought we would be at the end of the year. And the things we have to be careful for now is a little bit of a spring slide in some of that pullback because we have had such a great return out of the gates.
Why do you think there might be a pullback?
Well, as you see today, Bernanke came out and said that he doesn't see a need for any more easement throughout the rest of the year unless it warrants it. So the markets today reacted to that. People want to see some type of easing. We don't know where gas prices are going. We don't know exactly what's going to happen when it comes to some of the foreign markets, such as Europe, Italy, Greece. There's a lot of things that are going to play out over there that are still unknown.
But Europe is getting a little better, isn't it? At least it's out of the headlines, or maybe just out of the headlines for now.
What they're coming up with is corrections, but they still have a way to go. So it's something that it's going to be a process, not something that's fixed overnight.
Mm-hmm. And you know, we do live in a global economy. It's very interesting and sometimes concerning that even though the United States might be getting, if they are, their house in order, you know, places like Europe are obviously we're very much impacted by those events, aren't we?
Absolutely, and it's a ripple effect, and what you're seeing is, just like we were affected in 2008 domestically within the United States, that had a ripple effect that reached the globe. So it's no longer just an isolated, you know, you can do business in one country and not have it affected by another.
Mm-hmm. So, you know, basically sometimes, you know, even though like, you know, President Obama might have a certain economic direction, he's sometimes captive to world events, isn't he?
This is true.
Mm-hmm. And even geopolitical events, like you talk about, you know, the crisis with Iran and Israel and so on and so forth. If that actually explodes, no pun intended, that could have huge detrimental effects on the economy, can't it?
Absolutely, 100%.
So that's always got to be weighed into the equation.
It is, and you know that's why we're diversifying, and we take with our investors what's called a tactical approach to investing versus passive. Passive is really kind of set it and forget it, where tactical is we're going to constantly be shifting as data presents itself. We're not chasing trends by any means, but if certain sectors or certain areas fall out of favor or fall into favor, we're going to take advantage of that. The best analogy I can give is, for example, exposure to international investing as far as this year. We've reduced our exposure starting at the end of last year just because of all the uncertainty that was on the horizon.
Mm-hmm. Interesting. So you look at all aspects of the global marketplace, not even just the financial.
That is correct.
Mm-hmm. Interesting. And you know, you talk about your clients. Do they sometimes get information overload from all the information that's out there from your company and others?
Yeah, that's absolutely an issue that we face. And I think we do a pretty good job at taming that because our job is to be, in essence, translators as well as educators. So my job, if I feel I'm doing a successful job, is being able to translate all this complex information and relay it to my clients in a way that makes sense to them so they feel comfortable with their current position financially as well as what we're trying to accomplish and where they're going.
Mm-hmm. And it's interesting, did your clients have to make a big adjustment, in the 08 period because returns were so great before then, getting more down to reality?
Yeah, 08 was a tough year, and that was something that kind of happened over time, and no one really enjoyed it. I mean, but I still remember what resonates more with me more than even 2008 was after the .com era, when that kind of exploded. I mean, we had clients a year before things kind of really fell out who were upset because they had only earned 40% for the year, and their neighbor had earned 60%. So what you do is, and again, it happens as consumers become complacent and you forget. It's very, ironic that 2008 wasn't too long ago, but now, people kind of get accustomed to their surroundings.
Interesting. Now, you talk about the .com bubble.
Sure.
I think in that period, wasn't the NASDAQ up to like 5,000 or something?
Yeah, and it was.
So it's never really recovered, has it?
It hasn't
getting
reached.
there.
Yeah, it is getting there. It's still in recovery mode, but as you can see, it takes time.
So many people that thought they were set for life aren't really in that situation.
Yeah, it was very unfortunate. People who didn't take the time to really diversify their assets, and fortunately our clients are well educated, but 2008 hurt a lot of people. You hear the term lost decade thrown around a lot. People are pretty much close to standing still from where they were 10 years ago. Improving now, but nonetheless, that's if you're someone who's retiring or was banking on those assets, and a year like 2008 comes around, that hurts you.
It's interesting to me as you talk about, some of the gurus out there. Kramer, was having a lot of accolades. I couldn't believe that in 08, he actually told people to sell.
Yeah.
I don't know if you remember that.
I mean, I do. And Kramer, he's a unique individual. He's what's we consider to be our typical Wall Street guy who's seen the trends, who's been around for a while. So he's very good, when it comes to really diving into those stocks and those companies and what's going on. But, he's been right a bunch of times, but he's also, had his fair share of mistakes. And I give him a lot of credit because he always owns up to them.
He did. He owned up
absolutely.
to that one, yes.
It was 2 years ago. I remember one of the CEOs he had as a guest on and was telling me everything was fine. You know, a week later they were filing for Chapter 11. So,
oh, really?
Yeah, and you know, I remember him coming on and apologizing because it was one of his picks, but you know, that's the world we live in. So I give him a lot of credit for what he does.
No, it's good. Yeah, at least he owns up to it. Now, you did talk about, you know, some investment or previous investment strategies, kind of set it and forget it.
Yeah.
At Northstar, that's not really what you do. Is that kind of an antiquated strategy, just to buy some stocks and just let it ride?
Yeah, I mean, what you used to see back in the day was that you can set a portfolio, you know, pick a little diversification and then kind of go off and about your business. But as we've seen with years like 2008, certain things and certain strategies fall out of favor. You know, over the last couple of years, we've been fortunate to dive in not only to different asset classes, but different strategies where, for example, absolute return has been very popular, where you're not only just hoping for things to go well in the market, but you're also hedging against the downside. So if things do fall out of favor, you can still be profitable in some areas.
Interesting. And I know many companies, or a lot of companies now, don't have retirement programs, so it's kind of left to the individual, isn't it?
Yeah, we're seeing more and more, you know, retirement plans are provided pretty commonly, but what we're seeing is things like pensions are going by the wayside.
Pensions, yes.
They're just too expensive. We're living too long. It's a very, you know, similar situation to Social Security where, you know, improper planning, people living longer. So now more and more people need to rely on their own and, you know, do the good job when it comes to their investments.
And it must be, I think, very interesting for you and sometimes challenging because you do have a, you know, very educated clientele base. Sometimes I would assume that, you know, they have their opinion, but you have yours, and you kind of have to negotiate in between, right?
Yeah, absolutely. And I mean, I have clients who, you know, I can have the candid conversations with and say, come on, you know, this is what I do for a living. And then there's others that, you know, I have to kind of take them through an approach and validate why their, you know, concerns maybe aren't exactly what they think they are. And it's a moving process, and it comes back down to that information. There's so much information, and bad news sells, and, you know, you don't hear as much about the good as you do the bad. So it keeps us busy.
Now, you know, for you personally, how does it feel to be charting your own destiny and, you know, in the entrepreneurial spirit? Is it exhilarating, I would assume?
Yeah, it is. It's really all I've known. I did a stint in corporate America for 12 months, and really very quickly I knew that this wasn't
You didn't
for
like
me.
it?
No, I didn't like it. Middle management and people, you know, telling you what to do and getting their positions by seniority. It just wasn't for me. For some people, it's great, but I had my vision, and, you know, I thought that what we could build would be of value, and so far it's been working out fairly well.
And speaking of vision, where do you see Northstar Wealth Management into the future?
Yeah, Northstar Wealth Partners is growing, you know, daily, but we're something, you know, our vision is really controlled growth. We're about quality over quantity. So, you know, we see ourselves expanding into other marketplaces. We're up to 4 offices now, you know, with the 5th one coming towards Southern Connecticut probably later this year. And, you know, we're just going to kind of take it in stride and see where it goes. We're, you know, very excited where we are right now, and fortunate to have, you know, the notoriety and clients and everything.
Fantastic.
We have.
Well, Brandon from Northstar Wealth Partners.
There you go. Yeah.
Thank you so much for being
Pleasure.
on the
Thanks for
Business
having
Buzz.
me.
Time just flew by, and you certainly are someone that's really on top of things.
Thanks.
And for our viewers out there that like to get more information on your company, how can they do that?
NorthstarWealthPartners.com. That has pretty much all of our contact information. There's a lot of good resources there. As I mentioned in our conversation, as far as reviews, what's going on with the marketplace, as well as how to get in touch with us should you have questions.
Fantastic. Thanks so much for being on the Business Buzz, and thanks for tuning in to another edition of the Business Buzz. We'll be back next week with another exciting guest. Thanks for tuning in.
Okay. A lot of fun.
That was easy, huh?
Yeah.